73% of the numbers you need to run a successful business are not listed on the profit and loss statement. Okay, you caught me. I made that number up. Some may call that creative accounting, but I stand behind the point. The majority of the numbers that you need for your business are not listed on the profit and loss statement. Profit and loss statements are fun to review. They help you answer questions like, are we delivering services profitably? You can easily see gross profit. It's 50% of sales. And if that aligns with your goals, you've quickly answered that question. You also can answer the question, are we operating profitably as a whole? You can look at your bottom line number and compare that to your total sales and see that you've got 12% profitability. If that aligns with your goals, then great. If not, then you know you've got work to do. You can also confirm that as your sales increase, that your profitability is increasing as well. And so sales increased by 20% and our gross profit, we're getting more efficient and we're seeing huge strides in our bottom line. But the report has limitations. Stay tuned to learn the top 7 money problems that you cannot see on the profit and loss statement that might be preventing your company from growing the way you planned. The first money problem that you cannot see on the profit and loss statement is profit does not equal cash in the bank. Profit does not equal cash flow. So the profit and loss statement does not report things like the principal portion of the loan payments, when you replenish inventory, or when a customer buys from you today but pays later through the accounts receivable process. All of these transactions are reported on the balance sheet. That's a different financial report. So this would explain why your company may be profitable according to the profit and loss statement, but you don't have as much money as you need to actually pay your bills on time, pay employees, and grow your business. The second money problem that you cannot see on your profit and loss statement is sometimes the formatting of the report has missing cost, and it's actually really cost of doing business that you need to see. So when you look at a profit and loss statement, you might have a really high net income and you might start thinking, oh wow, this is great. And you start to make financial decisions based on this information. For example, you might see a large number with net income. You might have some extra money in your bank account and you think, okay, well, I'll spend $50,000 at the end of the year to buy a new truck. But the problem is, because the profit and loss statement was missing information, you did not see that your income taxes are $74,000. So you should have reserved some of that money. And so that's why you can kind of get this financial surprise and even whiplash when tax time rolls around, because you kind of regret making that decision back at the end of the year and you think, oh, well, if I had only known that this was coming, I would not have made that same decision. And so one of the ways to reduce financial surprises is by making sure that you're looking at a profit and loss statement that includes all of the cost of doing business. The report over on the left, even though they both have the title profit and loss statement, it's actually based on the tax return. So it only includes the expenses that are tax deductible depending on your tax structure. The format over on the right is the true profitability report because it's based on what accountants refer to as book basis. And so to make sure that your profit and loss statement includes all of the costs of doing business, ask for the book basis, because you want to see all of the costs, not just the expenses that are tax deductible. The third money problem that you cannot see on your profit and loss statement are all of the free expenses that are not on the books. And this is pretty common when you set up a service in your personal name, but then you never transfer it over to the business. Or maybe you bought an asset in your personal name, but you've never transferred it over. And so it's really common with your cell phone service, and maybe you are making a loan payment or insurance for a truck that you personally bought. It's common to consider these costs to be free since you've already paid for them, but in reality, the business should be paying for the monthly expenses and saving for their replacement. And I've got to warn you that you've also got to keep in mind that some of these free expenses may not be tax deductible, but that's okay because you want to see the true cost of operating the business. So that way you can make sure that you're charging the right price. So that way you have every chance possible to generate enough cash for your business. The fourth money problem that you cannot see on your basic profit and loss statement is a profit cover-up. And so you may see a basic profit and loss statement where you see your total sales are $500,000, gross profits $240,000, the percentage is 48% gross profit. Wow, this is excellent because your goal was 45. You're really making progress, moving the needle. You are in the positive 3%. But the problem is you may have a profit cover-up. One department may be losing money and pulling down the profitability of the other departments. But keep in mind the overall total may still be positive and moving in the right direction. But when you have this information where you can see that one department is underperforming, this will shine a light to where you can identify what's going on, what's working, what's not. So that way you can get the poor performing department up to where it needs to be, so that way it's not draining the efficiency and profitability you have in the other departments. And so when you have information at your fingertips, when you have reporting and transactions entered in a variety of details, you'll be able to slice and dice this information at the company level, by department, by service revenue stream, by customer, by job, even by employee, or even by sales rep. And so really having all of this information in a variety of formats will help you narrow down what's working and what's not. The fifth money problem that you cannot see on your profit and loss statement is hidden cost. These are the expenses on the books that are hard to find on the report since they're not listed separately. And so, for example, the cost of the promises that you make to your customers. Think about your guarantees, warranties, even rebate programs. All of those, if they are not efficient, then they might cost you more than you think, which is dragging down the overall profitability and also your cash flow. Another one is loss leaders. When you think about your sales funnel with your customer and how many services that you might provide before they actually start paying you, you might provide a free estimate. It might turn into a maintenance program, then maybe a discounted diagnostic fee. You could be providing service 2 or 3 times with that one customer and still be in this loss leader phase. And you've really got to make sure that you understand the true cost of those loss leaders, because a free estimate is only free to the customer. It's costing you money. And so you've got to make sure that that is actually being considered in your profitability reports, and also making sure that you're considering the impact on your prices and cash flow. The sixth money problem that you cannot always see on the profit and loss statement is inefficient operations. This one is a little bit tricky because if the inefficiencies are bad enough, you will see them on the profit and loss statement. Your cost of goods sold will be much higher than you planned, which means your gross profit will be much lower. But it's amazing how small inefficiencies can hide for months without being detected on profit and loss statements. From the profit and loss statement, it's really hard to see if a customer falls through the crack when they move through your company, through all the different departments and steps. You also cannot tell if all of your marketing campaigns were effective, or if your sales team relied on discounts to meet their sales goal, if your technicians made 3 trips to the supply house. Office may have forgotten to call past due customers. All of this really start to erode your ability to operate in a very efficient manner. And so you can start to see some of the symptoms of that on the profit and loss statement, but taking a deeper dive into the numbers and really tracing how your customer flows through your business, you can really shine a light on some of these profit leaks in your business. The seventh money problem that you cannot see on your profit and loss statement is unhappy employees. When you think about the cost of toxic employees, it can wreak havoc on your bottom line, but you're not always sure exactly where it's hiding. Also, the cost of employee turnover, recruiting fees, retraining someone new, and then also the employee theft. When employees are not very happy, they might be stealing from you. And so it's not always easy to see the true cost of unhappy employees on your profit and loss statement. So the bottom line, the profit and loss statement provides a lot of valuable information, but it's important to be mindful of the limitations. Did you know there are countless ways to view financial information in your business? These are the 7 financial viewpoints I recommend business owners pay attention to. Now, do you notice how profit is only one of those viewpoints? When you really master and understand the big picture of all of these, you're able to charge the right price, make more informed decisions, so that way the business will generate a surplus of cash to fund your growth plans. And so check out my video about the 7 financial viewpoints to learn more about each one. I've included the link down below in the description. As always, thank you so much for watching. If you have a business finance question, please reach out. I'm happy to point you in the right direction.